All right, let's talk about Marvell Technology's latest earnings call because, wow, it was an absolute game changer. This wasn't just another quarterly report. We're talking about a fundamental shift in the company's entire story, a huge signal that they are going all in on the AI revolution.
And you know what? The market totally agreed. The reaction was just immediate and explosive. The stock shot up 13% in after-hours trading. That's Wall Street screaming, we are all in on this new AI-focused Marvell.
So that really gets us to the big question, right? The one we're going to dig into today. Was this quarter the critical inflection point? Is this the moment Marvell finally transforms from a kind of semiconductor laggard into a pure-play AI powerhouse?
Okay, so here's how we're going to break this all down. First step, we'll get a handle on Marvell's huge pivot to AI. Then we'll hit the Q3 numbers that really lit a fire under the stock. After that, we're diving deep into their massive, and I mean massive, bet on a company called Celestial AI. Then we'll look at the super confident guidance for the future, and finally, we'll wrap it up with our rating and what we're watching for on the next call.
So just to give you some context here, Marvell stock was not having a good year. While pretty much everyone else in the semi space was riding the AI wave, Marvell was actually down over 15% heading into this report. This call was their big chance to prove they belong with the A-team of AI infrastructure. And boy, did they take it. Okay, so let's get to the numbers. What exactly got everybody so fired up? Well, on the surface, it was a classic beat and raise. They did better than anyone expected for the quarter, and then they told us the future looks even brighter. But the real story, as always, is buried in the details. So check this out. They posted record revenue of $2.075 billion and non-GAAP EPS of 76 cents. That EPS number, which is basically how much profit they made per share, ignoring some one-off stuff, was a solid beat over what Wall Street was looking for. But the really important thing isn't just that they beat, it's where all that strength came from. And wow, when you look at where that growth came from, it's just undeniable. Their data center business grew a massive 38% year over year. It's now nearly 3/4 of their entire company. Let me be super clear about this. Marvell isn't really a diversified chip company anymore. They are a data center company, full stop. And the best part? They're basically telling us this isn't just a one-off. The party's just getting started. Their guidance for the next quarter was also really strong, pointing to $2.2 billion in revenue, which is, again, ahead of what the analysts were predicting. This is a trend, not a blip. But honestly, as good as the quarter was, it wasn't even the biggest news. The real bombshell, the thing that really changes the entire story for this company, was a massive strategic play they announced. They're not just riding the AI wave, they're trying to build a whole new surfboard. Okay, so you gotta see this move for what it is. It's a huge strategic swap. They just finished selling their slower growth automotive business for $2.5 billion in cash. And what are they doing with it? They're turning right around and pouring that money and more into a $3.25 billion deal to buy Celestial AI. I mean, this is textbook playing offense. So you're probably asking, what is this photonic fabric thing they're spending billions on? Think of it this way. Right now, data centers connect their chips with copper wires, like plumbing. But as these AI systems get enormous, that plumbing is getting totally clogged. It just uses too much power and isn't fast enough. This tech, photonic fabric, is like ripping out all that old copper plumbing and replacing it with fiber optic light pipes. It moves way more data using way less power, which is exactly what you need for next-gen AI. And listen, this isn't some pie-in-the-sky science fair project that might pay off in a decade. Management gave a very specific and frankly a very aggressive timeline for making money from this. They're expecting real revenue in fiscal 2028, hitting a $500 million annual run rate by the end of that year, and then doubling it to a $1 billion run rate just 1 year later. That is just an insane growth trajectory. All right, so how does this massive bet fit into the bigger picture? Well, this is where management got really, really confident. They weren't just talking about the next 3 months. They were laying out a bold, multi-year roadmap. You just have to listen to this quote from the CEO, Matt Murphy. It says everything. He's talking about strong growth in fiscal 2027 and then acceleration. And let me tell you, in the investment world, the word acceleration is pure gold. When a company says growth is not just continuing, but speeding up, that forces everyone to throw out their old models and rethink everything. And we're not talking about small numbers here. These projections are huge. They're telling us to expect data center revenue to grow more than 25% next fiscal year, and then for that growth to jump to a mind-blowing 40% the year after that. That is some serious momentum.
So, what's the big takeaway? What's the number to remember? When you put all the pieces together, management is signaling that they are aiming for a whopping $10 billion in total revenue next fiscal year. That sets a very clear and very high bar for them to clear.
Okay, let's wrap this up. We've seen the numbers, we've seen the strategy. What does it all mean for the stock? Let's build the bull case. Look, the bull case here is just staring you right in the face. They've made this hard pivot into the hottest part of the tech world. They bought this amazing tech that gives them a real long-term advantage. They're getting tighter with giants like Amazon. They're doing it all with smart financial moves. And to top it all off, they're giving us a multi-year forecast where growth is actually speeding up. It's a powerful story. So how do you think about this as an investment? Well, the core idea is that Marvell stock is being fundamentally reevaluated by the market. It's not just another chip company anymore. It's becoming a top-tier AI infrastructure leader. And right now, it's still cheaper than its main competitors. As they keep hitting their numbers, we expect that valuation gap to close. The market will be willing to pay more for Marvell's stock as it proves it's a true AI leader. So when you put it all together, the pivot, the accelerating growth, that transformational deal, our rating for Marvell is a clear outperform. We think this earnings call was the start of a whole new chapter for the company, and the market is just beginning to wake up to it. Now, of course, this is not financial advice. The big question from here is simple. Can they actually pull it off? It's an incredibly ambitious plan, and you can bet we'll be watching every step of the way.